Well, good evening traders, thanks for joining me. What I'll do in this video is give you a part 2 of individual trade analysis. So we've gone through the first watch list in the previous video. If you found that interesting, that's well and good. What I'm going to do, of course, is continue that on from our discussion just before. So I've just brought up a new watch list. It consists of the following 10 or so individual shares, and let's just work our way through these shares, doing a little bit, of analysis, and looking at trade setups anyway, leading into the third week of trading for March 2014. Now, one of the shares which I am most excited about is eBay. What we can see for eBay anyway is that we've been in a very, very long-term consolidation. Now, this is really, really good for us because it tells us that if price breaks above all of these old resistance levels, then there's really not a lot holding it back from getting into or breaking out into a new bullish trend. So as you can see, taking a look at the long-term picture, you can see the trigger here at $60.05, and it's just sitting there. It's literally just sitting there waiting for price to trade up into that area before we start looking at eBay and looking to get into, obviously, core contracts as options traders, which we trade here at Pivot Point Trading. So there's definitely more upside potential to downside potential on eBay just based off this chart pattern in and of itself. Now, we do have earnings coming up in April, which I hope doesn't mess this trade up. What I'd like to see is to see this breakout before earnings. So it is a little bit of a race before time, essentially, because you can't really trade over earnings. You don't know the outcome of earnings. And of course, if it gaps against you and you're holding a position, it could be an absolute disaster. So you can see we have this bracket trade, $60.05 and a 54.51 bearish entry if in fact we roll back down and trade into these lower support levels. So that's eBay in a nutshell. Facebook, really just hitting our head into resistance up here, about $72. We do have a nice bullish candlestick today. It's what we call a hammer candlestick. It is at a support level, a very short-term support level. So again, Facebook could just rally back up into resistance, but until it breaks 73.15, it's not on my radar at the moment. GILD is interesting, very, very interesting. It's very, very bearish at the moment. You can see really since March, it's been selling off, and we're down here at a support level. Now, this trigger down here at 74.44 is really, really nice. It's below the 50, the 10, and the 20. It's also below that rising 100 simple moving average. So what I'm prepared to do is just bring it down a little bit, bring it down to about 74.29, and then we need to look for other areas of support which could be good targets for us. And the first level that comes to mind is definitely this level here at around $69 or $70 a share. So if we get triggered in this particular share, next target is really going to be down here, and I'm just going to move this down so you can see, really about $70.37. It is a little bit above support, but you don't want to be greedy when you trade the stock market. So that's a really nice trigger. I've got IRM as well. Now, this is getting into a very tight Bollinger Band squeeze. You can see how all of these bits of the analysis are leading us to a squeeze. We've got our exponentials moving completely sideways, prices between all of them. We've got the 100 and the 200 right on top of price. It's absolutely suffocating it. Our oscillators are all neutral, middle, and the MACD line is absolutely dead. So when we have a look at our Bollinger Bands, again, it's only a matter of time until these really squeeze and constrict price. So as these constrict price and as they sort of get closer to price, we'll be able to bring down our entries to catch that volatility breakout. At the moment, we can't do it, but it's getting very, very close. MA, looking good also. We've been bouncing our head into resistance, all right? And until we break 79.49, then I'm just sitting on this and remaining neutral anyway. We are in a bullish trend. You can see we have fan line acceleration, and that's going to act as support until we break down below it. So although I don't have a bearish trigger on it, I'm more excited about the upside potential. If in fact we break above this, our next targets are all the way up here, about $84. So you've got about $5 of profit on MasterCard if in fact it decides to break out. Same with MU. We are getting into a little bit of a sideways market movement. Most of the time these corrections take place to the upside once we get closer to the 100 and 200. And as you can see, it is becoming closer. There's not really a good shorting opportunity on MU because of course the trend is higher. So 26.13 is the bullish breakout, looking very, very good. Tesla, coming down to old window support, or what we call gap support. You can see here we're finding buying pressure coming up, if I just zoom in on the detail, right around the support level here. So until this closes, you have to remain bullish. So definitely, if I take a look at the exponentials, you can see we're sitting on the 10 and the 20 also. So although it looks a little bit bearish, and it could well and truly happen. We could place a trigger down here and catch the downside break to the 50. It really goes against my DNA of trading against the trend. So if anything, you can bring down this 269 entry and really bring it down to about 250 a share. So if Tesla breaks out above 250, the trend will most likely be continuing. We'll be getting that buying support off the gap, and of course we'll be bouncing off those exponentials. So that's a really good trade setup on TSLR. Twitter, not a whole lot happening. It's not really something that I want to talk about. I'd rather talk about other shares. Now, Yahoo had a really good bearish entry here at 36.21. Did it trigger? No, it didn't. That's okay. We knew we placed our trigger in the right area, and price just didn't confirm. So today's session, we had a bullish gap. It really sort of breaks down this bearish entry. We were here to set up and make money on the bearish breakdown. It didn't occur. That's fine. Don't beat yourself up. But really, the next opportunity is above these old resistance levels at $41.88 a share. Zinger to finish with breaking out into a bullish trend, but it has had an array of pretty bearish candlesticks at the moment. What I'll do is simply put a bullish trigger here, about $6 a share, $5.92 for the next bullish upswing. Really on the downside, it'd have to go down here about $4.84 a share. So that's Zinger, and that really rounds out some of the big technology firms anyway, outside of our top 12 individual trade list. If you have any questions anyway, please email me. More than happy to help you out, and to give you feedback on individual trade setups or any analysis questions that you may have as you have a look at these videos and work through some of these analysis videos which I post on this trading channel. If you have any friends who are interested in trading, or if you yourself are looking to get into trading and you're looking for free education, have a look at our scholarship initiative which we're giving away. It's only going to remain for a little bit longer. I can't say when, but it isn't going to be around forever. It is 12 hours of trading content, 8 classes, and it addresses really a really good foundation for trading, and also options, how to trade options effectively. This goes for 3 hours. It's 2 classes, and that in and of itself is probably worth a couple of $1,000s. So very, very good initiative, I would say, on behalf of Pivot Point Trading. It's a matter of fact as to whether you want to take it up and sort of advance yourself as a trader. So all the best, everyone. Have a good trading week, and I'll see you later in the week for more analysis. Goodbye.